Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, March the 2nd, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We create two main hypotheses, which is based on whether the buyers or sellers take control. Nobody can tell you what the market's going to do. Therefore, we have contingency plans in place, and then we wait for the market to show us who is taking control, and then we execute on that plan. We also create two alternative expansion hypos, which we've seen a lot of lately. In fact, yesterday we're going to talk about hypo 3 or hypo 1 turning into hypo 3 and when that occurred. This is a subscription room. If you're interested in checking it out and getting a free trial, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, in the pre-market, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please do your own due diligence, your own trade plan, and your own risk metrics. So let's review yesterday. Now, the reviews and the hypos, you can go to my YouTube channel, and there's probably close to four years, maybe 5 years up on YouTube of these pre-market sessions. So you can, I don't draw them like FT does. Just because I don't have very good drawing tools, but you can go and verify. So yesterday, our main hypothesis was a open auction in range. We were talking about a wide opening swing, and we were looking for a rotation up into the 25, the microcomposite VPOC, and then somewhere between the 25 and the 31. We are looking for responsive sellers to rotate us down, come down, fight the low of the prior day, and then break down and come down, and we were targeting that 95, 94.75. And basically, hypo 1 played out almost perfectly. And then hypo 2 was the alternative. And we said we had a 50-50 shot on it. We were looking for an open auction, a move down into the 95, and then rotating up through, and then chopping between the 95 and the 27.12. We kind of got a little bit of both there, but hypo 1 mainly. The dip down to the 98 was a little bit less expected, but once we got back inside the move up into the 25, and man, we nailed that 31. And failed right at the 31. Then we were looking at hypo 3, which hypo 3 was an open rejection reverse or an open auction, a move up to the 12 area, fail to get above the 25, and then come down, fail, and go down to test the year open being the 26.75 with a late day probe down into the 60s, and then basing and rotating up in, and we were looking for a close in around the 80-81 area, in that right around that microcomposite LVN area. We didn't quite get that, but pretty darn close. Large, huge rotations. If you look at yesterday's average rotations, they were 13.25, 12.25 up, 14 down, just massive volatility and expansion. Let's look at the news. The news, we had GDP this morning coming out of Canada. Came out 1.7 versus expected 2, so it was a little bit of a miss. I don't know what, I didn't check to see what the ISM was that came out at 8:45. 10 o'clock, we've got Michigan consumer confidence and sentiment. 10:30, the ECRI. and then 1 o'clock the Baker Hughes. Of course, the key today, and what caused this flush yesterday was the announcement by Trump that he is going to put tariffs on steel and aluminum and about to create a trade war. And trade war is never good for anybody. So let's take a look at the macro. I always start with a simple candlestick chart. It's a routine I go through every day. And what I do is I use a 9 EMA, 20 SMA. I'm looking at where we are within the trend in the different time frames and working my way down into the intraday, because I want to understand what the big picture is so that I don't get my bias too much to one side or the other. You can see on the monthly, we've got good slope, good separation. We are coming down to test the, the 9 EMA again. That'll take us down into the 2617.50 on the monthly. If we break that, then we're challenging this trend, and the violation won't occur until we get down until the low 29.75. So we have room to go down still without violating the trend. I mean, we've had this massive 14 months of one-time framing up. In February, we violated the one-time framing. So we are seeing a challenge to the trend, but the trend is not broken on the bigger picture, and we can still go down, and it would be a normal retreat. You can see on the weekly, though, we broke down. We're starting to violate the trend. They tried to take it back, and now they've failed, and we're back below the 9 and the 20. The 20 SMA is up at 2681.50. We're below that. The important one, though, today, and I want to talk about this, is on the daily, because the daily is showing a negative bias based on we're below the 9 and the 20. We're getting slope and separation to the downside, but we've got a significant candlestick pattern that's showing up. We were in an uptrend after this big flush, and then we got a bearish engulfing 4 days ago, and then we put in what they call a 3 black crows. And a 3 black crows is a reversal pattern of an uptrend. So if any pattern can fail, any chart pattern or any candlestick pattern can fail, but these ones have a pretty high consistency of proving that we're likely to go down and push down further. So we've opened overnight, and we've gotten lower. So we do see we're looking for a balancing day today, but we're watching for the breakdown. And I don't think that 25.29 low from last month is totally out of the question to be seen in the coming days or weeks. Going to the intraday, the 4-hour. You can see that accelerates. We're getting good slope, good separation. Trend is very strong. Price is paralleling the 9 nicely. We're coming down into this support level down here in the 2600. And then going to the 30-minute. You can see that we had continuation, consolidation, continuation, consolidation. Now we're getting continuation. We're expecting consolidation, and then the failure and the break. So let's take a look at the structure. It's going to be a little bit convoluted just because the ranges are so wide. But where this whole thing started was back here on these breakout days. Back in the October 2nd, October 3rd, we came up and we created this base and the micro composite around the 2581 area, and accepted that balance, broke up, accepted balance, broke up, and just walked our way up, all the way up into new all-time highs. Don't forget, gang, we still have unequalized highs up here. The Globex all-time high is 2878.50. The RTH all-time high is at 2875.75. That's a high probability that at some point in time, we're going to go up and take that out. Now, we've come down quite a bit, not expecting that anytime soon, but that's why I'm saying you pay attention to the larger time frame, and that monthly, the trend has not been violated. On a smaller time frame, we had that big breakdown, the move down to the 29 in the Globex, which was the February low, 30 and a quarter in the RTH, and then we created this balance around the 43, then accepted, broke out of that balance, came up here, started basing around the 28 area, 27, 28, tried to get back. We were looking for that move to the significant breakout candle, which was the 81.50. We got that. It happened in the Globex and in the RTH. And then, of course, we were trying to hold value here around the 58, and we failed. And we've come right back down. And now we're inside of this prior microcomposite value area, with the value area up at 2709, value area low down at the 2613. So we're just coming back down into balance. So I am looking for a move down today to the 43, and then basically chopping around. So if we move to our Globex, you can see that we opened inside of the distribution from the prior day. Because of the fact that we had the big move down, we were looking for continuation down overnight. They basically chopped around in this lower distribution and then failed in the European session, and Europe took us down. And where the VPOC, Globex VPOC was around that 76, 77 area all night, it just shifted down earlier this morning, and basically it's right at the low from yesterday as they fight that low. Our overnight high is up at 84.75. Our overnight low is at 52 and a quarter right now. We were coming down and challenging. You see we're putting higher lows in right now. Inventory is about 80% net short and in time and volume. So we are looking for a rebalancing and move up. Basically our hypos are going to be very similar to what they were yesterday, just in different trade levels. The LVN is right near the mid, and the VWAP for overnight. So I'm looking for balancing and move up into this area, and then failure somewhere around there. So if we start moving our numbers, I've already put all the levels in. I'm just trying to usually do this live, but I'm trying to cut down. We've got a couple singles that we left above on the move down. These are TPO singles from yesterday. One at 95.50, and one at 98.50. It's right near the VWAP and the mid and the LVN. This is a double distribution profile. Even it's a trend profile, but we did get a double distribution. We're currently chopping inside of the lower distribution. There is a little LVN right here. I'm not paying so much attention to the LVN here at 73 as I am paying attention to the year open. The year open, the Globex open of 2008 was 26.75.75. I tweeted about it yesterday that we were likely to go down and take that number out. And then our average true range, our 20 period full session average true range is running at 68.21. I have not seen these levels since 2008. This is very, very large average true range and volatility that has kicked in. So I've basically put most of the levels in. So let's talk about what our hypotheses are. My main hypothesis is we're going to open auction just in range or just out of range. But I'm looking for, again, we're going to see some wide swings on the open. So just be careful. It is Friday, and I always caution people on Friday, if you're up on the week or you're struggling, okay, just keep it really tight and really light. You don't want to go into the weekend and kill your emotional capital and have to deal with that all weekend until Sunday open. So I'm looking for an open auction, just out of range or just in range. I'm looking for wide swing, but I'm looking mainly to come up into the distribution, take out the gap. We do have gap rules in play right now, and I'm looking for a move up into this area, take out the overnight high, come up into this 95 area, 98 area, and somewhere up here, I'm looking for them to fail, rotate us down through the lower distribution, chop between the overnight low and the range low from yesterday, and then push down into this 43 area, maybe even a probe down into the 37 to 28 area, but basically basing and chopping around this 43, this prior balance area that we've broken back into. So that is Hypo 1. Hypo 2 is an open auction out of range or just in range, a push down into the 43 area, maybe even down here, and then basing and going sideways and fighting between the 75 and the 43. Basically, Hypo 1 and Hypo 2 are mirror images, like I talked about yesterday, because of the probabilities of range expansion and the volatility. They get equal weight. I don't know which one's going to happen, but I'm assuming that we're going to hit those levels basically on both sides of the hypo. The only difference is on Hypo 2, I don't think we get up into the 95s. I think we basically get stuck in a tighter range today as we go into this consolidation pattern. Hypo 3 is going to be a breakdown day, and one of two things. I'm looking for an open rejection reverse or a open drive, but I'm basically looking for the gap not to get filled. The gap fill will take us up into the 78.50. Right now we're trading at 61, so 78.50 plus 60, let's say 61.50. Our half gap fill is at 70, and that was an important level for us before. So let's just put that. It's going to be approximate because I don't know, come on. I don't know exactly where we're going to open yet. So this is going to be approximate half gap. And so basically, Hypo 3 is an open auction, open rejection reverse with a move up into the half gap fill, but failing to close the gap. Sellers take control early, take us right down into that 43.25, chop here, and then fail and get a continuation day. And I'm looking for a continuation day down into this 18 to 14. We still have a naked close and a gap down here at the 18 level. And our average true range down target from the overnight high of 85.50 is down here at the 17.25. And then looking for a base on that and basically working our way up and closing around the 28. So those are my first three hypos. The fourth hypo, which is lower probability, but we've been seeing a lot of lower probabilities in this market lately, is a take back day. And that would be a open auction, just in range, just out of range, failure to get below the 47, push up early into closing the gap, chop in this upper distribution, push up into the LVN, break back above, and come up into the 27.12 12, 27, 10 area and go sideways in the upper distribution and start auctioning this territory. So those are my four main hypotheses for ES. Take a look at gold. Gold, we were watching that 14 level yesterday. We said if 14 level failed, that we were coming down and we were targeting this 1303 area, this former microcomposite down here, and we were looking to see if 13 held. If 13 held, we were looking for the rotation back up, and that's basically what we got. If 1300 fails on gold, which could be likely, if we go back down there again, remember that the composite VPOC, which goes all the way back to February of 2008, is down at 1284.90. What does that mean? It means that the most traded price is still below us on the long time frame. And if we don't hold 13, this is going to be a big magnet. And it's going to be a good opportunity to get short into it if we don't hold. I'd be looking for a break below the 98, the 1298.20. Right now, we're back up into this balance. Let me add these here. The 2-day microcomposite VPOC on gold right now. Actually, I'm going to go with 3-day is below us at 19. We're above that 22 area we were talking about yesterday. So look for them to keep pushing up into this 28. And this is where I'm expecting either a reversal or a breakthrough, the upper side of this distribution. If we get above it, the target, immediate target, is the 30 level. But if we get above that, it's right back up into the larger time frame balance up here in the 39 again. If we fail here, look for the rotation back down into the 19, and anything below 14, look for them to push down again into that 1300, and any failure below that, the first target is the 94 area, and continuation down into the 84.90 and composite VPOC. So that's what I'm looking at in gold. That's going to complete our pre-market session. Again, if anybody wants to come in for a free trial in the room, just send me an email at quantumleapfutures@gmail.com or send me a Skype request to Doug_McKay, MCKAY. I'll be the one from Windsor, Ontario, Canada. Trade well, trade safe, and we'll catch you on the flip side.